I'm here at APEC in Singapore, APEC 2025 in Singapore, and this being APEC, of course, the oil market was front and center. And just yesterday, OPEC Plus decided to increase production again, about 137,000 barrels a day, so less than what they have announced in recent months, but still a signal that they're going to continue to increase production. So a lot of the talk today was, what does this mean? And also, what's going on in China with China's stock building, and what does it mean for prices over the next months and next year? So first, let's go back to OPEC Plus. They've been increasing production, and going back a year ago when they first announced this plan to increase production, we were saying that part of the reason is to maintain cohesion within the organization, to maintain unity, because some members wanted to increase production, and that was one of the factors behind the decision to increase output this year. And then you had President Trump become president again in the United States, and he has been encouraging more oil production as well. So the fact that OPEC Plus has been increasing production, that's not a surprise. They have been increasing it at a pretty fast clip. We think that total OPEC Plus crude oil production, actual crude oil production, is up almost 2 million barrels per day since the beginning of the year. That's a lot of oil. Keep in mind, last year, oil production was lower than the year before. So 2024 output lower than 2023. This year, it's the opposite. So what does this mean for oil prices? Well, let's go to demand. When you look at crude oil demand growth, it's about 350,000 barrels per day. So that's crude oil demand, not liquid fuel demand. Liquid fuel demand is going to be about double that. But crude oil demand growth, much slower than total growth in supply. But here's the China story, a fascinating story with China. A lot of talk here at APEC about this, China's crude oil stock building. So there's various estimates for how quickly or how much China's been adding to its crude oil reserves this year. Our estimate is that year to date, through January to August 2025, China's stock building, crude oil stock building, was around 530,000 barrels a day. That's a very, very large increase. And that has soaked up a lot of the surplus so far in the oil market this year. In fact, in the second quarter, we think Chinese stock building soaked up almost the entirety of the surplus that was in the market at that time. So when we look at the next few months, at the next year, we know OPEC production will be higher than it was, certainly higher than a year ago. There's still production growth outside of OPEC Plus, Guyana, Brazil, Canada, a little bit from the US. So that's still growing. Is all this supply going to be soaked up by demand? Well, certainly crude oil demand growth is not going to soak it all up. Continued Chinese stock building has the potential to soak a lot of it up. So our assumption right now is that China's stock building, the rate of increase diminishes. And if that is the case, we also have a seasonal decline in demand, which means there'll be a significant surplus in crude oil inventories in the months ahead. However, if China were to maintain or even increase the rate of its stock building, then it could continue to soak up a lot of the surplus crude oil. So much depends not on Chinese demand, but on the rate of Chinese stock building for national economic security purposes. So we see a surplus. Does it go into inventories in the Atlantic Basin, which would depress prices more? Or does it go into Chinese storage or some mix of the two? That is the key factor. We do see prices coming down from where they've been, below $60. And around these levels, another key development in the oil market we think will happen. That is the decline in U.S. crude oil production. It hasn't happened yet, but oil prices and the investment climate, that's what determines U.S. oil production. And we're at price levels now that's likely to lead to flat, we think even declining U.S. oil production next year, which could set the stage for a potential price recovery for later 2026, perhaps into 2027. Also, if OPEC Plus continues to increase production beyond what's already been announced, a year from now, we could be talking about how little spare capacity there is, or at least how much less spare capacity there is now. So today's market going into the fourth quarter of 2025, looks like there's a surplus. Where does it go? Chinese oil storage tanks or into the Atlantic Basin? Different price implications depending on where it goes. A year from now, could be a different story. But before that, the big question is, where does the surplus go?